Hello and welcome to TradeHive. In this very short video, we'll be looking at the basic usage and functionalities of the ARGOS system. Now, first things first, you should have opened a basic blank chart on TradingView. Click on indicators and by default, you should be on something around my scripts. Go to invite only. You will see this ARGOS daily level, which is here, not the rest, this one. So this particular indicator you need to attach to your chart. Okay. So what you need to do, indicators, invite only, and go to Argos daily levels. You will see something like this attached on your chart. Now, before we proceed with the whole system, let us take this signals one by one and see how what they mean basically. So the initial thing which I will do is I will go to the settings from where all the features can be switched on and off. And I will start with the stop loss line, which is the first one. So I just untick everything else. I think I've almost unticked everything. Yes. So you are left with a stop loss line and you have left with some boxes. We'll come to the boxes later. Let's stick to the stop loss line first. The interpretation of a stop loss line is simple. If price is below the stop loss line, you're basically bearish on the chart. So that means this particular stock is bearish. If price is above the stop loss line, you're bullish. Simple. Okay. Interpretation one is simple to understand. Now, it also means that the system bias is bullish or bearish. So, if you're looking at a chart, any instrument, this line simply tells you at that point of time whether you should be looking for bullish trades or bearish trades. So, if it's a bullish view, then look for long signals. If it's a bearish view according to the dynamic stop loss line, look for a short signal. The second one which we will focus on, which is very interesting, is basically the weekly range. Okay, so there from the settings I go here and show daily projections. We call it the range vector. Once you click it, you will see two types of colored zones are coming into play. Now what happens is, let me remove the stop loss for a second so that we can concentrate just on this one. Forget this as of now. So now you have every day when the market starts, you have a projected range for the day. So this range vector actually means how much, according to quantitative analysis, we expect a normal range for the market to be in this particular day. For example, when this day the market opened, my upper range was something around 620.90 and lower range was something around 614.30. So this range is telling you we expect the market to be within this range. So whenever you see the prices going above this range or below this range, that is where a trending move might start. That is, the day might not be a range bound day. You could have a pretty trending move. For example, if we see the last two boxes, this is Thursday and Friday. If I look at this place where this broke, then again where this broke and stayed, and from there the market was bearish. Similarly, this day when we broke outside the range, the market turned bullish. So this is the simplest explanation of a range, number one. Number two, it is another interpretation. You should have noticed that these boxes have two types of colors. One is yellow and one is blue. What this tells you is when it is yellow, look for a breakout outside the range. When it is blue or green, whatever color is coming on your chart, this means prices are probably going to take support and resistance and upper and low levels and jump within those particular space. But if there's a breakout or a breakdown, then the market might move big in one particular side. For example, here it was trading very much within this. If I can focus on this, yeah. So here market was trading very much within the range, broke out and then went up. Again, this particular, this was blue. See, it is kept coming down here, breaking down, again taking the support and going around the full day. So very simple, when it is blue, expect the ranges to work as support and resistance. When it is yellow, look for a breakout outside the range. Simple. Okay. Now, here what we were doing is, This range projection was set as D, which means it is daily range. But when we are starting trading for the week, this can also be a weekly range. If I change this to W, this becomes your weekly range. For example, on QQQ, if I notice this, starting from Monday, this range was projected like this. So we were trading within the range. The range broke on Thursday evening, and there was the massive sell off leading to a gap down on Friday morning. If you go to the previous week, Monday was within the range. The weekly range broke on Tuesday itself. And as you can see, the whole week market was actually trending down. Correct? Let us proceed a bit further. This is the weekly range, goes up here. Sorry, not this one. Yeah. This is the weekly range. See these places, the weekly range resistances are coming into play. The weekly range support has come into play. Here is your breakout and here is your move. Again, this particular week, support, resistance, resistance, whole week spent within the range. Okay, as I said, if it's a blue bar, chances are high it will be spending that whole time within the range. So if you know the range and prices are within the range, you can trade kind of mean reverting setups. And when you're outside the range, whether daily or weekly, you can play for a trending move. Let us remove this now and go to the next feature. Yeah. Now we have something like dots and arrows on this particular chart. I'm bringing that into play now. Let me bring back the stop loss also. Dots, arrows. Stay off counter trend signals when you're starting off because this is advanced. Do not try to use this when you're first using the software. Just use the dots and arrows and keep this unchecked. So what does it happen? What you will see is when you are trading within the range, that is, let us say this particular, say this particular day, what's going on out here is this is telling you points where chances are high that if you buy, price will go up. So when this dot comes, if you buy out here, the green line will be your stop loss and price does goes up. Similarly, from a red bar, price is supposed to fall. Okay. So this is a red dot. And if I'm selling out here, my stop loss is the red line here. It never falls. It goes up a bit. Another sell signal comes and then the market falls. Or this particular bar, market falls. This particular signal, market falls. Got it? Similarly, if it's a green dot, that means market from here will rise. Now, what is the difference between a dot and an arrow? When you are getting the signals within the zone, within the projected range vector for that day, then you will get the dots. When you are getting the signals outside the zone, when prices have already moved outside, is this weekly? I think so. Let me just change it to daily. Yeah. Now we are on daily charts. Let us go to the last few charts that should be explaining it well. For example, okay, this one will be a classic example. You're getting a buy setup within this particular zone. That's why it's giving you a dot. But if you're getting a buy setup out when the price has already moved outside the zone, then it will give you a signal. Okay. For example, these sell signals are outside the zone. Now understand this. If you are below the lower projected level, that's a level of bearishness which is coming from some quantitative analysis. These signals are another level of quantitative analysis focused on some totally different aspect of the market. So this particular signal is actually a culmination of two signals. This signal, one, we are outside the range. Two, there's already a sell signal that is a triangle, down triangle forcing out here. So chances of success on this are high. Now let us come to the next feature. So stop loss and target lines. Okay. So whenever you get a confirmed signal like this one, let us proceed to this one. For example, this signal. So you sell out here. This red line is your stop loss. This green line is your target. Stop loss and target are always in the ratio of 1:2. Now this one can also be manipulated from the settings itself. So if I go to settings, risk is 1.5, reward multiplier is 2. That is 1.5 into 2, correct? Say I want a smaller stop loss. I will change this to 1. See, the stop loss got reduced. I want a bigger target. Say 1:3. I keep like this. See, the target will come down. Got it? So now when the sell comes, I'm selling out here. This is my stop loss and this is my target. And I'm continuously operating on a risk reward of 1:3. Ideally, what we do is, this is basically the default which you will see. This will be 1.5 and this is double that 1.5, 1:2 RR. Depending upon which stock, which instrument, which commodity, which CFD you are trading, you can adjust the stop loss and target levels according to your market interpretation and what you see on that particular market. For example, if the trades are within the zone, I'll be probably looking at a 1:2 RR. If the trades are outside the zone, I will be looking at a 1:3 RR. Now, in our main course, the market mastery, we spend almost 2 to 3 hours on this particular system, making people understand the nuances. And please try to understand, due to certain limitations, this particular video will be focusing on the most important features, and we will not get into total detail, nuances and everything in this video. Okay, thank you. So let us proceed. These are the features which were already there. Now, what do we have extra? Stop loss and target signals we already have. Now what we have is something called a scanner. Let us say I am trading QQQ, but I also want to watch Euro USD. I want to use how much is gold moving, where is natural gas moving and stuff. So go to the settings. These are already actually ticked by default. Just tick this show market scanner table. What this shows you is gold, this is today's range. Your trend is bearish. Bearish means the prices are below the stop loss level. Natural gas, this is the range. Silver, this is the range. Euro USD, this is the range. GBP USD is the range. So if I'm trading, see, also the range, whether you should play for a breakout or you should play for mean reversion, the color is according to that. Gold is basically blue, which means today we are expecting gold to stay within the range and trade according to that. So if I go to gold, okay, if your chart comes like this, just go to the right hand side, click this particular place, auto fits data to screen. It will be solved like this. Okay, this was gold yesterday. This was yesterday's range. Absolutely top of the range, there was this resistance. And if you see the breakdown out here, it was one side move when we went outside the range, correct? So on the scanner, you can see these particular instruments, what is going on there. Now in the professional edition, which we teach, these instruments are here also you can actually manipulate this particular number of scripts. So if you want to watch something else, you can pick this up here. For example, let us say I want to watch Meta. I want to watch a stock. So I click on Meta. Now this will show you, sorry, where did it go? Just give me a second, please. Gold, crude, Nasdaq, Meta. Okay, this is, we change Meta in place of natural gas. Just watch the screen. Meta. So Meta had a range of 590 to 610 and it is bearish. So if I open the Meta chart here, price is below the stop loss, it is bearish. Yesterday this was the range and this is how it operated. So what I'm trying to show is this table which you see out here can be manipulated by the user. You can watch 7 stocks, what you like. In the professional edition, we have more features on the scanner and other rules and stuff. One feature we still haven't covered, that is this box. So in order to show you this box, the biggest advantage, I'd say the way to show this box is if I just show you the box, nothing else. Okay. So what I'm going to do out here is, what the box actually means is, market is in a compression pattern. Now, In market, other than trend momentum, there's also something called volatility, and volatility goes up, goes down. So the boxes actually capture those zones where volatility is primarily low. Okay, so let us start from this place. What I'm going to do is I'm going to start a. Okay, we are back, and as I was telling you that the best way to show this is basically if we are seeing this from a particular point of view where uh, the boxes will get created in front of you. So what I'm going to do is I'm going to start a replay. Let's say I come here. Okay. Okay, let us proceed. I will stop in between when I will show you what is actually going on. So bars are getting constructed. Market is moving as it is. Let's just increase the side of the chart a bit. Yeah. I'm not using any other indicator or systems features of the system. I'm just using the boxes. So what I'm trying to show you is how the box is being created and what happens after that. Okay, just stop it out here. Here, what the software identifies is there's a congestion going on in terms of volatility. It gives you a box. Now, white means it is being constructed. It is not confirmed. And on the right hand side, if you watch clearly, here it is 0, here it is 1. So these numbers will actually change. Whichever side has higher numbers means the chances of breakout or breakdown is higher on that side. For example, if the upper number is high, chances are we will break out on the upside from the box. If the lower number is high on the downside, chances are we will break down on the lower side. Now watch this once again. If you can read this number is 4, this number is 0. So chances are we are going to break down on the downside. But obviously it is getting completed only when we will break down or break out, not before that. If we break out, this box will turn green. If we break down, this box will turn red. See, this is 13, 14, 15, this is 7. So obviously bias is more on the downside. 19, 7, 27, 21, 7, 22, 7. So there's a lot of selling going on within the congestion zone. 26, 7, 27, 7. Jumping up and down. But this is telling you there's a lot of weird distribution, which is, yeah, now you go. This is your breakdown, and see the box immediately turned red, and this mark got marked as a breakdown. Let us proceed. What I will do here is increase the speed a bit. Now just keep on watching. You will see the box getting formed. Yeah, breakdown. We're just waiting for if any other box comes into play. Okay, it comes here. This is yesterday. Yeah. This signaled a congestion zone yesterday, and yesterday till closing, we did not get out of this congestion zone. Correct? Yeah. But for Monday, we can now be ready. That is, if the market starts trading above this level, or if the market starts to trade below this level, we will be in with a directional trade. So this actually signifies there's a volatility compression going on. Breakout or breakdown will confirm your trade. So this is how the box works. So let's get back here again, and just now, as I said, do not use the counter trend signals now, and put everything into place. Yes. Now all the features have been inputted, and this is how these trades are getting done. Now, what I was showing so far was basically on the real-time charts, correct? But this also works on an end of day chart or hourly chart. If I'm going to trade this on an hourly chart, what I will do is, first of all, I will just remove the scanner. remove the daily projection, and I will change this to, let's say, 1 hour. Now you're getting hourly trend and trades and everything. Sell, it falls down. Here is another sell signal, it falls down. Now this will work across the board. Let's say I go to gold futures in COMEX and I change this chart to daily. As I said, if the chart comes like this, click here, auto fit data on screen. Yes. This is gold end of day data. See the compression box? Gold was totally compressed within that time frame. Then breakout. This is your stop loss. You have a buy signal also, another breakout and single one-way move. It is not that I'm showing you one move. It has happened many times in the past. Okay. Buy signal, you buy, goes up and hits your target, buy signal, like. So whatever time frame you're trading, it will work according to that. Now let us say we again come back to 5 minutes. And we just daily projection and stuff. We put on every feature. Now this was, I showed you QQQ, this is gold. What if I do Euro USD? Not futures, I want one of the CFDs. Okay, I can use on forex.com. So this is your Euro USD, same features, same buy sell signals. Rather by doing not anything, if you just trade outside the zone, you should be having one good trade a day if the situation so arises, correct? If you are an aggressive trader, you know this is the zone within which it is going to stay and you are at absolute low of the zone. You might take a trade out here, this particular signal when it gives you a buy with a stop loss placed out here. Stop loss in fact will be smaller. This particular zone was buy from the morning, boxes, breakouts outside the zone and went up. Here is your sell, your bearishness. So you have access to this system for the next 1 month. Use it on any instrument you like. Just understand how a quantitative system functions. And as I've said earlier, we have just covered this, I would say, scratch the surface of this system. It has a lot more nuances and a lot more uses. We will be teaching that in the course itself. So before we go, I will give you a do and don't. Now what you need to do is use the stop loss line as your primary trend filter, correct? Respect the daily range vector bands. Do not short any green candle inside the strong uptrend above upper band. That is, if you are above the upper band, try not to short. If you are below the lower band, try not to buy. Do not use counter trend when you are starting off with the system. Counter trend is a much advanced concept which we will cover later. Use the scanner to avoid messy instruments. These are what you do. Now, don't is do not take every dot or arrow blindly without understanding context or market structure. Don't go into random sizes in your trades because unless you follow money management, chances of making money are very low. And last but not the least, do not override the system stop and target on every trade. That is, if the market falls, you said, okay, this is giving me a sell signal, but I think market will go up, let's buy. Don't try to please do that. Follow the system, respect the system, and you should be good. Now, the aim of this video is basically to show you how a quantitative system functions. Of course, I would say 25 minutes is a very small time to show someone a fully quantitative system and show the usage. The aim is for you to get a taste in the next 1 month of how a quant system can perform in real-time market. We can show a lot of backtesting. But again, backtesting is backtesting what has happened in the past. We want you to see this system in real-time markets, whatever instrument you are trading, to see how it performs in actual real time, how the ranges perform, how the stop loss lines perform, how the buy and sell signals perform, everything. If you do have a question within this 1 month regarding any part of this system, feel free to contact us in our office. Somebody will answer your query on a one-to-one basis. Okay. So that's all for now. If you are convinced after a month that this system or the approaches we are following in quantitative can make you money, please come and meet us in our offices. We'd love to talk to you and see that you become a good trader in whichever instrument you are trading. Okay. Thank you. And thanks to all for attending this particular video and being with me for some time. I know your time is valuable, and I sincerely thank you for giving me your time. Thank you.